Hi, Atef. Welcome back to Canadian Jeweler. It's so great to have you.
Thank you so much, Diana. It's great to be back on the show. I'd
Please.
love to. Thank you so much.
Yeah, it's our pleasure to have you. Atef, for those viewers who may be just joining us for the first time, if you would do the honors of a quick introduction.
Sure. My name is Atef Salama. I'm the Vice President of Express Gold Refining in Toronto. We've been in operation since 1994, and we enjoy having these conversations with Canadian jewelers and with all our viewers.
Wonderful, and we love to learn from you. So we're so honored to have you back. And the topic of the day is the impact of inflation on and interest rates on gold prices. So that's something that a lot of investors would be very keen to know what is going on right now in the market. And maybe you could just give us a bird's eye view before I get into the specifics of our questions for today. But what is happening right now with inflation? And
It's
interest
been
rates, and how is that affecting everything?
correct. So it's been quite an interesting market. We've seen huge moves in the last about 3 months, or even a little bit more since the Ukraine war has started. There's been a lot going on in the market, and investors are just trying to digest how to react to these type of changes that are happening so fast. Once you start thinking you've got the market in the right position, something comes out of nowhere and throws us off. So there's a lot to break down and consider. But generally, what we're seeing is the aftermath effects of the COVID, the shutdowns, liquidity in the market, and that's been causing huge price surges, which causes inflation. And obviously, it has adverse reaction and influence on the price of gold as we decipher how to go through this market. So we'll see what we'll discuss how to get through this.
Mm-hmm. Wonderful. And so, with all of this inflation and how it's affecting interest rates and gold prices, how is that? Well, I guess maybe we could just touch upon it now. How is that affecting investor opportunities? What should investors understand about this kind of climate?
So there is multiple. Unfortunately, it's not a one-line answer because there's so many factors. But we have inflation hitting all-time highs, as we've been hearing in the news. We're at 40-year highs since the 1980s. We haven't seen these type of inflation numbers at 8 to 9% in Canada and the US. And I would say worldwide, pretty much it's hitting every part of the world. So it's not unique to the North American market. So what's happening is everything is getting more expensive. It's cutting into people's wages. It's cutting into what people can buy. And inflation, unfortunately, is one of those tough things that central banks have a hard time controlling. Once it spirals out of control, it's very dangerous for the market because it affects our everyday life. So, going out to buy a sandwich all of a sudden used to cost $10, now it's $11. It's a real hit.
So Atef, so of course everybody's noticing inflation, right? The gas prices, food prices, everything is more expensive. And you made the connection to the war in Ukraine, and so why does inflation happen generally around crises like world crises? Why does that occur?
So the Ukraine-Russia war is unique in that aspect because a lot of wars would not affect inflation per se worldwide. But what has happened is there's been multiple sanctions, shortage of oil, pipelines going to Europe. There's been a shortage of food supply because Ukraine supplies the largest amount of wheat, supplied to the world, and that's been cut off. I think they signed some agreement to let it go through, but again, we're behind now by 4 months of supply. So shortage of supply, people start gouging, and whoever has it, sets the price. We're seeing the Middle Eastern oil, hit $100, $120 a barrel prices, which is crazy to see in our market. So it's short supply, fear. They all feed into this frenzy.
And you mentioned that this is the all-time high since what year? So this is a rare kind of occurrence, isn't it?
We haven't seen it in 40 years at least.
40 years.
Yeah.
Yeah.
The last time we had this in the 1980s, interest rates went as high as 12 to 15%. So technically, right now we're around 2.5%. So we're far away from what we've seen in the 1980s.
Right. So in situations like this where obviously everybody notices that inflation is at play, how does that affect investors? Is it benefiting those who are already in the market and already have bullion in their hands, or is it how does that work?
So again, there's everybody can benefit from any market, really, depending on the position. There's no right time to jump in or jump out of the market. It's a live market. It's if you've missed an opportunity, there's always another one to jump in. So never feel
Well,
left
not to
behind.
panic, that there's always a way, even during difficult inflation periods.
There is a way, and gold is known to be a hedge against inflation, and that's why we had originally seen gold price react properly and go up. Everybody started buying gold as a hedge against what they're seeing in inflation. So there was an opportunity for people that had gold. They bought it since it was 15 and 1600 to sell it at $2,000 three months ago or 2 months ago. What we've seen in the last, I want to say, 3 to 4 weeks is we've actually seen a decline in the price of gold, which is quite unique to our market now. It's happening. So it's giving investors that didn't have liquidity or didn't have the opportunity to purchase. This is a great time to start jumping in, and if you have extra funds, to purchase them out.
So you foresee that happening again then?
I think normally gold should behave in the way where it's supposed to. It's go up when there's inflation. What we're seeing is all the central banks, including Canada and the US, are increasing interest rates at very fast pace. We've seen the Canadian central bank increase by 1% a couple of weeks ago, unheard of in the Canadian market. The US has another a rate hike today. We're anticipating probably a 0.25% hike. So what we're seeing in reaction to gold going down is correct, because now money has interest return, gold doesn't. So people are reinvesting a portion of their money and selling the gold to invest in the money markets.
Right. Actually, speaking about the Canadian dollar, is there a situation where the strong Canadian dollar can counter the impact of inflation on gold?
Again, normally it would. The Canadian dollar surprisingly has held steady in this market, which shouldn't have, but it has. There's a good demand for our dollar. Oil prices, seeing where they are, our dollar should have been probably at the 1.2 level, but we're still around the 1.28 to 1.29 level. And that's so really what's happening is gold is still, we're still getting the effect of the higher prices of gold, even with the Canadian dollar being where it is right now. So normally we would have seen gold go up, Canadian dollar get stronger, which would have kept the Canadian gold pretty much the same level, but that hasn't reacted like that recently.
Okay. And why do you think that is?
The Canadian dollar, we've been seeing rate hikes at the same rate as the US. So if our government wasn't doing that, we would have seen a huge move in the Canadian dollar. So, and obviously we produce oil also as a country, so there's demand for our dollar. So these two factors have been keeping the dollar at bay around the same level, so it hasn't changed. We've seen currencies like the euro take a huge hit. The euro was trading at 1.3 or so against the US just a few months ago. A week ago, we hit par with the euro. So, there is a lot of movement happening in the money markets also.
What would you recommend for a consumer with regards to the gold portfolio? What is your recommendation?
We always say there is an opportunity if you haven't purchased before. And I think we're seeing very good levels here to purchase, to start adding to your portfolio.
Mm-hmm.
We weren't anticipating to see these levels given the market with the war and inflation. We were seeing gold keep moving up past the $2,000 mark. But I think here we're being presented with a good opportunity to jump in at a good rate. Even if it goes down another $100, we're still quite in a good place to purchase. And if you have gold and you're lucky, hold it. Because again, we do have inflation that is still out of control. So it's a great hedge against inflation. So
Mm-hmm.
we really, we're in a position, buy if you don't have, hold if you have.
Right, right. Hold if you have.
Yeah.
Yeah. Because you see that inflation is going to continue to go up at this point, or?
We're talking about probably at least another year before we see the effects of interest rates hitting, food in the supermarket, where these things don't change.
There's a window of time, is what you're saying.
There's at least, yeah, we're talking at least a year before we see maybe 4%, going half where it's supposed to be.
Right.
The U.S. has a mandate of a 2% interest rate. So we're very far away from that number, which will take time for it to translate into a market.
Right. Okay. Can you talk a little bit about what recession fears are? What are they? How does that impact, human behavior when it comes to purchasing, investing, buying, and selling?
That's again, when you see inflation, it means there's a high demand of product, or there's a huge activity in the market which we can't control. What's happening right now is there is a shortage of supply, which is causing most of the inflationary changes that we're seeing. So what's going to end up happening with central banks raising the interest rates is companies are going to start slow down hiring. People are going to slow down the demand because now their paycheck is 10% less, really is what's happening, right? Everybody's just got a pay cut of 10% on their paychecks.
You mean because pricing has gone up?
Pricing has gone up by 10%, right? So what we used to be able to spend $1,000 on, now we're having to spend $1,100 on for our just normal day-to-day stuff.
Right.
So people are going to start saying, okay, maybe today I won't go out to the restaurant, and I'll save that, $80 on a meal with my friend, right?
Right.
So now the restaurant business starts slowing down, slower demand for food.
Everything, yeah.
Right. So, and that's what the government wants to do, is to slow down the demand, to start lowering prices.
Right.
So the restaurant will have to lower the prices to lure people in, and that starts the whole cycle of going into recession. To slow down the inflation that's happening, and then the supply chain will catch up with.
Is that a way to correct recession then?
Eventually, they're going to have to start lowering interest rates again,
right?
And that should pick up the economy again. So it's going to be a bit of a challenge for central banks for the next at least 2 to 3 years to bring us back into some sort of stability in the market. And this is notwithstanding any other shocks to the system, right? So recession fears are basically people fearing due to the lack of available kind of resources and the raising prices on things, so people start spending less, trying to save more, and that kind of creates a trickle effect or a butterfly effect with regards to everything else. Exactly. It's a cycle. Yeah,
it's a cycle, right? But when it comes to investing, your suggestion is not to allow those fears to impact you, to take advantage of the market opportunities, that you're seeing still another good year where people can invest into gold, where the returns are still going to be substantial, and those who have gold just hang on there.
I think that's again, given there's no further changes to the market, I think this is where would be sound advice. Yes.
And those who are holding on to their existing gold portfolio, how do they ride out the waves of inflation? Do they just kind of like hold on, and then the next wave they still hold on and they still hold on? Is it just sort of like a very long-term investment that you ride the waves with? And how does gold continue to be such a stable investment, and why?
So again, there's going to be a time where you're going to sell. Obviously, you're going to have to convert your gold to something that you can use. So let's say you're buying a house. The house prices have gone up obviously quite a bit over the last period of time. The idea is gold is going up at the same, might not be the same rate because we've seen a bubble in the housing market, but generally as prices go up, the gold price is going up. So when you come to convert your gold into money, if you bought it at, let's say, in Canadian dollars, $2,000, and our inflation rate is at 10%, so really now you're $2,000 a year ago, now you're spending $2,200. So today gold is $2,200. So when you sell it, you haven't felt the effect of inflation because the gold has gone up with it. So you do that at any level of $2 million, you're at $2.2 million, right? So the house that you were going to afford a year ago, you hedged yourself against the rise in inflation of the 10% because the price of gold has gone up by 10%. And you sell it, you buy your house, and now you're in the market at the same rate. So that's the main use of gold as a hedge against inflation, and that's how it's supposed to behave. Is it's supposed to go up pretty much at least near inflation rate increases. So that's why we suggest to hold until you really need to sell it, and then you sell it, or there's another opportunity. If the stock market is really crashing, again, gold would be a good hedge. You sell it and you buy stocks. So it all depends on your strategy for investing.
Amazing. So is there anything else that you can give us in terms of advice when it comes to gold and inflation, or do you feel that at this time we've kind of covered our bases?
We've touched on it quite well. I think there's always a lot more happening, and there's changes every day, but I think this is the general
general gist of it for now. So don't panic is the advice to folks out there. If you can get in now, as always.
Yeah.
And then if you have, then hold, and then maybe even get, keep reinvesting, keep gaining more. Are there any other precious metals that you think are a good hedge against inflation during these times that you may recommend? And of course, we always direct people to come and speak directly to your team of experts to see the product in person if they wish, or on your website, which we always include in our link as well. So people can see and learn and understand what's available. But is there anything else that might be flying under the radar a little bit less than gold, but still a good investment opportunity at this time?
Silver, to an extent, it's not used generally as a hedge against inflation, but I think there's opportunity there to purchase into silver. It's a little bit less expensive, gives an opportunity for people that can't purchase the gold to at least hold some metals.
Okay.
So for sure, give us a call and let's discuss your specific needs. And based on the market, we'll try to guide you as best as we can.
Amazing. So we're going to include those links and make sure that people can find you, reach you, and also, connect with you guys in person and online.
Thank you so much, Diana.
Thank you for speaking with Canadian Jeweler. We look forward to the next time.
Great. Thank you.
Okay. Have a great day.
You too.